If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? Welcome to Weekend Recap on the Courtside Financial Podcast, a segment where we bring you a compilation of everything that went down throughout the week from a stories perspective. Before we get into this video, make sure you hit the like button, make sure you hit the subscribe button, and click the notification bell icon so you don't miss out on any content that's coming in the future. Today, we're going to be talking about NIO's recent announcement to issue $1 billion in senior convertible note, and there definitely is a lot to dissect here. Now, first of all, I do want to say that the whole month of September has been extremely busy for me, filled with lots of ups and downs. As I mentioned at the beginning of the month, I ended up getting back from travel. When I got back from travel, I ended up having the flu. After that, I had to continue to travel for work. So I went to Michigan, I went to New Mexico. I actually have to do some travel next week, I believe, to Dallas and to Austin. So it was hard to kind of get on the channel and put out content, but good to be back, good to get back and be consistent. And we're going to get to 100 episodes here. We're going to be posting every day, Monday through Friday, but today we're starting on a Tuesday. So we'll have Tuesday, Wednesday, Thursday, Friday, weekend recap on Saturday, and then the following week we'll have Monday, Tuesday, Wednesday, Thursday, Friday, weekend recap on Saturday, and that's the schedule that we'll continue to follow. Now, this isn't the first time we've discussed the idea of companies raising capital and the importance of using that money effectively, but let's get into the specifics of what NIO is up to. According to a recent Bloomberg report, NIO aims to price these convertible notes with a coupon rate ranging from 3.5 to 4.75%. Their offering includes $500 million in senior convertible notes due by 2029 and another $500 million in convertible notes due by 2030. Now, this is where things start to get interesting. The planned 2029 notes are designed to carry a coupon rate of 3.5% to 4%, and come with a conversion premium of 2.75% to 32.5% over NIO's share price. The 2030 notes, on the other hand, feature a coupon rate of 4.25% to 4.75% with a similar premium. What's crucial here is that NIO has some big names backing this deal. Goldman Sachs, JP Morgan Chase, Morgan Stanley, CICC. These guys are all the lead underwriters backing this deal. So it's not like they're going into this alone. Now let's address some of the chatter that we're hearing from social media users who on forums online who will keep anonymous. One commenter implies that the money from the Saudi investment was not sufficient. Well, raising capital is a common strategy for growth companies, and the sources of capital can vary. It doesn't all just have to come from one bucket. It's essential to consider how this money will be used, which ties into another comment from another anonymous social media user who rightfully points out that a company's strategy matters more than just the fact that they're raising funds. Interest rates are indeed high right now, and this strategy could help NIO position itself well on for the future. In short, it's all about what they do with the capital that they're raising. In conclusion, NIO's decision to issue $1 billion in convertible senior notes is a strategic decision, and whether it's wise or not depends on how they use the funds. As we've discussed before, raising capital is standard protocol for growth companies, and it's all about execution. We'll be keeping a close eye on this story as it develops. In today's episode, we'll be delving deeper into the recent financial maneuverings of NIO, and we've got some fresh updates to share, so let's jump right in. In our previous episode, we discussed NIO's decision to issue senior convertible notes. Now, this comes at a time where today the Federal Reserve has just announced that they would be holding interest rates high and steady for the time being, which is not really good for the stock market, and also cautioning about potentially higher interest rates down the road. The stock market was definitely feeling the effects, and of course with NIO having this news at a time like this, which is not ideal, the stock had taken a greater hit. Over the past 5 days, NIO is down 13%, which is huge. This is a scenario that's raised some eyebrows. Now let's dig into the nitty-gritty of NIO's latest financial move. They've priced $500 million of senior convertible notes due October 15th, 2029, and another $500 million due October 15th, 2030. The 2029 notes come with a fixed interest rate of 3.875%. They will be paid semi-annually in arrears on April 15th and October 15th every year, starting from April 15th, 2024. The specific structure aims to provide investors with a steady income stream while allowing NIO to meet its financial obligations. Similarly, the 2030 notes carry a similar interest rate of 3.875, with the same semi-annual payment starting April 15th, 2024. The symmetry in terms of the two note tranches indicate that NIO is at least trying to carefully plan its debt structure. Now let's address the fact that NIO has granted initial purchasers an option to purchase $75 million in both the 2029 and 2030 notes with a 30-day window. This option provides flexibility for both NIO and investors. It's allowing them to gauge market demand and potentially capitalize on favorable conditions. Before we dive deeper, let's address some comments that we've gathered from anonymous social media users on the net. One user mentioned that the previous bonds must have been at an extremely high interest rate for them to be issuing convertible notes. Now, we just described the interest rates of these convertible notes. They're under 4%. Market interest rates today are definitely over 6%, 7, maybe even. So it's pretty common for companies to issue convertible notes to refinance higher interest rates into lower interest rates. This move could be a strategic move to manage their debt more efficiently. Furthermore, let's explore NIO's plans for the proceeds from this offering. They intend to use a portion of the proceeds to repay existing debt security. So what does that mean? Like I said, refinancing their debt into more favorable conditions. This action can be seen as a proactive step to simply optimize their financial structure and reduce liability. It's a financial maneuver that aligns with sound corporate finance principles. Now, another social media user who will keep anonymous highlighted the need for more transparency regarding the offering, and I agree with this entirely. Transparency is crucial in the financial world, and it's something that investors value highly. NIO, like any other company, can benefit from clear, comprehensive communication about why they are doing what they're doing. The press release was not too descriptive, and it leaves a lot up to the imagination, and it's clearly bringing negativity to the stock and bringing negativity to investor confidence. In conclusion, NIO's pricing of the $1 billion in senior convertible notes is nothing to be taken lightly. This is something that's very serious. It comes at a time when the broader market is actually navigating its own challenges, which contribute to the downturn in the stock, in my opinion. Some of these challenges are posed by the current state of interest rates, which is adding to the turbulence in NIO stock. We've examined the terms of these rates, the additional purchase options, and NIO's plans for the net proceeds. It's a multifaceted strategy that could have the company poised for future growth, or it could be something that's negative and not the best decision made by management. And when I say not the best decision made by management, it obviously seems like they needed to raise the capital to stay afloat, but the timing of it is what I'm referring to. Raising capital is something that's necessary for growth companies, but like I mentioned earlier in this video, it has to happen at the right time. We'll continue to keep a close eye and watch how this story unfolds. Now, today we have some exciting updates to share with you guys as far as NIO. They've made some groundbreaking announcements. They have actually unveiled their first ever smartphone and their first self-developed chip. NIO Technology Day was an event that marked a turning point for the Chinese electric vehicle maker. This iconic day showcased comprehensive technological prowess going beyond its well-known brand services. The biggest highlights included the unveiling of their self-developed self-driving chip named Yang, the vehicle-wide operating system, and their new smartphone. NIO's full technology stack, as they call it, spans across 12 fields, including chips, vehicle-mounted hardware, battery systems, electric drive systems, and much more. Speaking of chips, Yang, the LiDAR main control chip, was a significant revelation. It's equipped with an 8-core 64-bit processor and features an 8-channel 9-bit ADC with a remarkable sampling rate. This chip not only enhances performance, but also reduces cost and power consumption, which is a key factor to consider when it comes to electric vehicles. But hardware is only part of the equation. NIO also introduced Tianshu Sky OS, a full vehicle operating system that aims to seamlessly integrate various vehicle components and enhance interaction between the car and external devices. NIO Link, their interconnection technology, plays a pivotal role in bridging the gap between vehicles, wearable devices, battery swap stations, and charging piles. With more than 40 apps already available in NIO's App Store, this interconnected system is expanding rapidly. In the realm of smart driving, NIO plans to offer enhanced pilot assistance services globally. This will start in October, providing users with a comprehensive point-to-point driving experience. Furthermore, they're developing a high-performance electric drive platform and an extensive network of power swap stations. NIO also has ambitious digitalization plans for its manufacturing process, aiming to hand over 80% of the manufacturing process to AI by 2025. This not only boosts efficiency, but also positions NIO as a tech leader in the electric vehicle field. But here's where it gets interesting. NIO isn't just about cars anymore, or at least that's what the masses thought. NIO is diving into the smartphone market, as we've discussed on this channel before, and it's here. It's finally here. Now you might wonder, why is a car company making smartphones? Li Bin, NIO's founder, explains that it's not about making money from smartphones, it's about creating a seamless product that enhances the NIO ecosystem. The NIO phone isn't your typical smartphone. It comes equipped with a Snapdragon 8 Gen 2 processor, a 6.81-inch 2K resolution screen, UWB technology for car control and voice assistance. Now you guys are obviously familiar with NIO's voice assistant. Its name is Nomi. Anyways, this smartphone is designed to complement NIO vehicles to provide users with a more seamless and integrated experience. And the best part is that NIO's pricing the phone pretty competitively. They're pricing it at around 6,500 yuan, which equates to about $890 US, cheaper than my iPhone. While it's their first foray into smartphones, it aligns with their vision of creating an interconnected ecosystem for their car owner. Li Bin touched on a challenge faced by NIO and other EV manufacturers and car owners in general, which was the closed nature of smartphone operating systems. He highlighted that Apple's iOS, for example, doesn't offer the level of integration that NIO needs for a seamless user experience. This is what ultimately led NIO to develop its own phone. These announcements mark a turning point for NIO. Not only have they demonstrated their technological prowess, but they've also showcased their commitment to creating an interconnected ecosystem. This ecosystem spans vehicles, smartphones, and more. As they continue to invest in technology and innovation, NIO is undoubtedly a company for the world to watch. In today's episode, we'll be talking about the recent roller coaster ride of the Chinese electric vehicle maker NIO. To set the stage, let's rewind a bit. Over the past week, NIO had two significant events that seemed to send conflicting messages to investors and industry watchers alike. On September 19th, NIO's stock at one point took a nosedive by 17%. This sudden drop sparked speculations about the company's financial health, obviously negative. However, just 2 days later, on September 21st, NIO held an innovation conference called NIO Technology Day. This event marked a pivotal moment for the automaker as they unveiled their full stack technology layout to the world for the very first time. In addition to showing their technological prowess, NIO also shocked the world and surprised everyone by unveiling their very first mobile phone. So the question that naturally arises is, why is NIO continuing to make heavy investments into a situation where they're grappling with significant losses and very tight cash flow? To better understand this, let's break down the two situations that seem to have brought NIO's stock price into a plummet. First, there's the issue of high interest convertible bonds. NIO recently announced the issuance of 2 convertible bonds, which will be raising a total of $1 billion. These bonds carry a relatively high coupon rate, being 3.9% and 4.6%, compared to their earlier bonds of 0.5%. This move indicates a sense of urgency as NIO really needs the capital. Second, there's the concern over NIO's sales prospects. In recent times, NIO's sales have weakened due to the increased competition in the market. Other reasons include model upgrades and overlapping product lines. Lower sales obviously resulted in reduced gross profit, all while marketing and R&D expenses continue to grow. With dwindling cash flow, NIO's financial situation appears to be pretty bleak for the time being. As of June 30th, 2023, their cash reserves have been decreasing rapidly. Clearly, they're facing the challenge of securing more cash while also dealing with all of these losses. However, it's important to note that NIO isn't simply just throwing money around blindly without a plan. To address investor concerns and justify their heavy investments, NIO showcased their full stack technology layout at the Technology Day event. The comprehensive technology package spans 12 core capabilities and underscores the value of NIO's R&D expense. One significant reveal during the event was NIO's first self-developed chip, Yang, a LiDAR main control chip. NIO expects this chip to not only boost performance but also drive gross profit growth, which they expect to cover their R&D expenses in a year. But back to our question, why is NIO investing so heavily in a challenging situation? According to Lee Bin, there's 2 key reasons here. First, NIO is clear about its business boundaries and resource limits, focusing on R&D, infrastructure, and user services, while avoiding ventures unrelated to smart electric vehicles. Second, Lee Bin and his team have unwavering confidence in NIO's ability to navigate this cumbersome situation, even after experiencing the near existential crisis of 2019, where the company almost went bankrupt. NIO's approach isn't without justification. Reducing investment intensity could harm the company's long-term success. Furthermore, some of NIO's sub-businesses, like its network of charging piles, have already become profitable, providing stable cash flow for the electric vehicle maker. In conclusion, NIO's recent stock price plunge has raised eyebrows, but the Innovation and Technology Day showcased that the company is confident in the decisions that it's making and its outlook for the future. They're also confident in the company's ability to manage risk. For NIO, it's about understanding their boundaries, confidently treading the line between investment and loss, and believing in their upward trajectory despite the challenges and the naysayers. That's it for this episode of the Courtside Financial Podcast. I want to know what you guys think about NIO's recent moves. I know that the sentiment out on the street is not very positive right now, but I definitely want to hear from you guys here on this channel watching this video, what you think, how you think NIO should be moving forward in the future. That's going to be it for this episode of Week in Recap for the Courtside Financial Podcast. If you found any of this information valuable, make sure you hit the like button. Make sure you hit the subscribe button and definitely leave a comment down below. Genuinely interested in hearing what you guys think about these this new style of videos that we're doing. Anyways, that's going to be it. I'll catch you guys next time.